In this class, we shall discuss about the different types of taxes. So when we say taxes, then they have been broadly classified into two types, that is direct tax and indirect tax. So let us have an insight into the difference between the direct tax and indirect tax. We shall also discuss who has the power to levy and collect different types of taxes and who has the power to appropriate the taxes. So let us begin with the discussion of taxes, that is direct and indirect taxes. Now, what are these direct taxes? Direct taxes are the taxes which are charged on profits and income. So let us take an example of income tax. So the tax which we pay on our income is called as income tax. Okay, it's called as income tax. Similarly, when we make a profit, let us assume we purchase an item and after that we'll sell that item. So the profits which we make based on buying and selling, that is called as profit. So the taxes which we pay on top of profit, again it's an example of a direct tax. Okay, direct tax. So direct tax. Next example of indirect tax. For example, if you buy a soap or a pen or a refrigerator or a laptop, so you pay taxes. So the taxes which you pay here, so they come under indirect taxes. Okay, indirect taxes. So here we broadly understood the difference between direct tax and indirect tax. Okay, so direct taxes are charged on profits and income, whereas indirect taxes, they are charged on goods and services. So as in goods, I took an example as a refrigerator, pen, etc. As an example of services, for example, when you watch a movie, okay, so you are using the services. So at that time, the taxes which you pay, they are example of indirect taxes. Next, direct taxes are directly paid to the government. Now, on the income which you receive, for example, annually, let us assume your income is 10 lakh. Annually, your income is 10 lakh, and let us assume the income tax is 10%. So it means you have to pay 1 lakh rupees as taxes. 1 lakh rupees as taxes. So you will pay this 1 lakh rupees tax directly to the government. So that's why direct taxes are paid directly to the government. A very important point to note. Indirect taxes are indirectly paid to the government. What does it mean? For example, if you go and purchase a laptop, so after purchasing the laptop, where you will pay the taxes? You will pay the taxes to the person from where you have purchased the laptop. Okay, so that person, the vendor, he will take taxes from you, and after later on he will submit it to some other entity or to government. So here we understood that when it comes to indirect taxes, so end users are not directly paying to the government, but rather intermediaries are involved, and finally the taxes which you have paid will go to the government. Anyhow, tax will go to the government, but here it goes indirectly to the government. So that's why they are called as indirect taxes. So in case of direct taxes, so directly we pay it to government, whereas in case of indirect taxes, we pay it, but indirectly it goes to the government. Next, these taxes are paid by individuals and businesses. So who pays the direct taxes? Individuals and businesses. An individual, whatever the income he gets annually, so based upon that he will pay income tax. Similarly, businesses or corporations, they pay corporation tax. So corporation tax as well as income tax. So these are examples of what? Direct tax. Next, indirect taxes are paid by end consumers. Okay, very important. Now, end consumers. So let us take an example of a biscuit packet. So here the biscuit packet, it involves multiple stages. So initially a person will buy what raw materials like flour, sugar, etc. And finally he will manufacture biscuits, and he will also purchase the wrapping cover, and finally he will sell it. Okay, he'll sell it. So the end user who purchases the biscuit packet, so he will pay the indirect taxes. Very important. Okay, they are paid by end users. Next, the rate of tax is decided by the government based on profit and income. Tax rates are the same for everyone. An important point to note. When it comes to direct taxes, so it varies. For example, let us assume a person. Let us assume one person has 10 lakh as annual income. Another person has 5 lakh as annual income. Let us assume in our example we have considered two persons, person 1 and person 2. Person 1 has 10 lakh annual income, person 5 has 5 lakh as annual income. So now government may fix different rates. For example, up to 5 lakh it may fix a tax at 10%, and for up to 10 lakh it may fix a tax of 20%. So in this case, so the person who earns up to 5 lakh, he will pay 10%, that is 50,000 rupees. And the person who earns up to 10 lakh, so for the first 5 lakhs he will pay 50,000, but for the next 5 lakhs he will pay 20,000, 20%, that is 1 lakh. So it means the person who is earning 10 lakhs, he will pay 1.5 lakh as tax, 1.5 lakh as tax. So in this fashion, the tax slabs can be changed for direct taxes. Okay, so it will not be the same for everyone, it changes. Okay, it changes. But coming to indirect taxes, they are not the same for everyone. They are same for everyone. For example, a person who wants to buy a refrigerator, a person who wants to buy a laptop, so any person, so whether he is a rich person or a poor person, all of them, they have to pay equal amount of tax. Okay, there is no such variation. So tax rates are same for everyone. Important point to note. This type of tax is non-transferable. So direct tax, if you are supposed to pay, you itself have to pay. You cannot transfer it to someone else. Whereas indirect tax, it can be transferred. So what does it mean? For example, a vendor who is selling laptop to us, so already he has purchased it from someone else. So while purchasing, he has already paid the taxes, but those taxes he is collecting from us. So it means he is transferring the taxes. Okay, transferring the taxes. So this type of tax is transferable. Next, an important term associated with taxation is progressive tax and regressive tax. So which kind of taxes are considered as progressive and which ones are considered regressive? So the taxes which help the poor are called as progressive taxes. The taxes which do not help the poor are called as regressive taxes. Now coming to direct taxes, an example is the income tax. So income tax, it can vary. For rich, you may levy more tax. For poor people, you may levy less tax. Okay. So income tax is an example of what? Progressive tax. So in general, direct taxes are example of progressive taxes, because here you can charge differently for poor and rich people. But coming to indirect taxes, for example, GST and all. So whether it is rich or poor, so all of them have to pay equal amount of taxes. So there is no differentiation between rich and poor as far as taxation is concerned. So that's why, so indirect taxes are considered as regressive taxes. A very important point to note. So direct taxes are progressive, indirect taxes are regressive. Now next we shall look into the various taxes which come under direct taxation and the taxes which come under indirect taxation. So in detail, we have already discussed about what is income tax, capital gains tax, etc. So you can watch our those class related videos to gain clarity. Here we will just at the superficial level, we shall just classify them as into direct taxes and indirect taxes. So here income tax, wealth tax, corporation tax, capital gains tax, fringe benefit tax, interest tax, securities transaction tax. So all these taxes, they come under direct taxes. Okay, direct taxes. Sales tax, service tax, value added tax, excise duty, customs duty, stamp duty and GST. So all of them, they come under indirect taxes. Okay, indirect taxes. Very important point to note. Now next, collecting what kind of tax is difficult and what kind of tax is easy. So collection of indirect taxes is easier, whereas collection of direct taxes is relatively bit difficult. Okay, bit difficult. Next, collection of direct taxes is administered and governed by Central Board of Direct Taxes, whereas collection of indirect taxes is administered by Central Board of Indirect Taxes and Customs. Again, an important point to note. So which one will help in establishing an economic and social base? Obviously, it is direct tax. Okay. Why? Because in direct tax, there can be different slabs for rich and poor. So that's why it helps us to maintain a good economic and social balance. Whereas in case of indirect tax, there is no such kind of distinction between taxes for poor and rich. So hence, they will not help in establishing economic and social balance. Okay, social balance. But the key benefit of indirect tax is every individual, whether rich or poor, he will end up paying some amount of taxes. So this is an important benefit of indirect taxes. Whether he is rich or poor, he'll at least pay some small amount of tax to the government indirectly. So this is the benefit of indirect tax. So which kind of taxes helps in controlling the inflation? So direct taxes, they help in reducing the inflation. So if the inflation is too high, then what the government will do? It will increase the indirect tax rate. Okay, sorry, it will increase the direct tax rate. So in this fashion, it will contribute to reducing the or controlling the inflation as well. Okay, inflation as well. So if we increase the indirect taxes, then it will not help to reduce the inflation. Rather, it will contribute to inflation. So disadvantages of direct taxes are they can be avoided. So some people they can use some fraudulent means to avoid the direct taxes. Next, investment restraints. If the direct tax is too exorbitant or heavy, then investors may not be interested to invest in India because of the high direct taxes prevalent in India. Okay, again an important point to note. Disadvantage of indirect taxes are people are unaware. So people they pay taxes, but they are unaware that how much taxes they are paying. Okay. Next, they are regressive also because both rich and poor alike, so they pay the same amount of taxes. So it is regressive. Okay, it is regressive. Okay. So generally, when it comes to taxation, we need to understand few terms. Terms like levying of taxes, collection of taxes, appropriation of taxes. Okay, appropriation of taxes. So what does the levying of taxes mean? Means imposing of taxes. Imposing of taxes. So it means how much tax we have to fix for a particular entity or a particular service. Okay. So there are some taxes for which can be levied by center and some taxes which can be levied by state. So we need to understand this term levy. Okay. Which tax can be levied by center and which tax can be levied by state. Okay, levied by state. So here levy means imposing certain percentage of tax. Okay, percentage of tax. So example, income tax. Who levies the income tax? Central government levies the income tax. Central government fixes the slab, that is up to 5 lakh it should be 10%. After 5 lakh till 10 lakh it should be 20%. So in this fashion, income tax slabs and tax rates are fixed by central government. Now coming to sales tax, it is levied by state government. So sales tax rate is fixed by state government. For example, if we take Karnataka as an example, in Karnataka, so sales tax charge is fixed by Karnataka state government. State government. Next, collection of taxes. So levying of taxes and collection of taxes, both of them are not same, they are different. For example, a center may levy certain taxes. Sometimes center is involved in collection of the taxes, sometimes state may collect the taxes. So that is why levying is different, collection is different. So collection means actually collecting the taxes. Okay, responsibility of collection of taxes. So as an example, income tax. Who collects the income tax? Central government collects the income tax. Now there is one more tax called as stamp duty. So who collects the stamp duty? Stamp duty is collected by state government. State government. Next, appropriation of taxes. So once you get the taxes, once you collect the taxes, so who has the authority to spend the amount? Who has the authority to spend the amount? So this is about appropriation. That is, who can spend the amount? Who can spend the amount? So later on we shall see which amount who can spend, who has the power, whether center has the power or state has the power. Now often we come across a term called as tax appropriated by states. So what does it mean? So tax appropriated by states it means taxes collected by the state government and used for its own purposes. So when I say taxes appropriated by the states, so for example, taking Karnataka as an example, so Karnataka state government will collect the taxes and use the taxes for its own requirements. So that is called as taxes appropriated by states. So there are certain taxes which have been by the constitution, it has been said that they have to be appropriated by the states. So whenever we say appropriated by the states, it means states will collect the taxes and states will spend the proceeds of the taxes according to their wishes. Okay, according to their wishes. We also come across a phrase called as taxes assigned to the states. So what does it mean? Taxes assigned to the states. It refers to taxes collected by the central government. So taxes assigned to the state means taxes are collected by the central government, but central government what it will do, it will distribute the taxes to the state governments based on the recommendations of the Finance Commission. Here what does assigned to the states mean? Collection responsibility is of the central government, but central government what it will do, it will distribute the proceeds between the various state governments, among Karnataka, among Maharashtra, among Tamil Nadu, among Punjab, etc. So that is the meaning of tax assigned to states. Tax assigned to states. Now let us look into service tax. Okay, so service tax, it is levied by union government. Union government fixes it. It is collected by both union government and state governments. There are some service taxes which are collected by central government, and there are some service taxes which are collected by state governments, appropriated by union and state governments. So as per what the taxes which have been collected by the center, it will be used by the center, and the taxes which have been collected by the state, so it will be used by the state governments. Next, coming to stamp duties. So levied by union. So who fixes the stamp duty? So the rate of tax, it is fixed by union, that is central government. Who collects it? States collect it. Very important point to note. Who appropriates it? Who can use this? Who can spend it? States can spend it. States can spend it. Important point to note. Next, income tax. Who will levy income tax? Union government will levy income tax. Who will collect it? Union government will collect it. Next, appropriation of the proceeds of the income tax. Finally, whatever the final income tax comes, so it is distributed between both center and the states. Both center and the states as per the recommendations of the Finance Commission. Next, value added tax. So it's a state subject. So it is levied, collected and appropriated by the states. Levied, collected and appropriated by the states. So it's a multi-point destination based tax. Okay, just at the superficial level understand that it's a destination based tax, and it's a tax on the final consumption of goods. Okay, final consumption of goods. So with the arrival of GST, so value added tax has lost its significance. Okay, significance. Next, transactions in securities or stock markets and future markets. Okay, so whenever you buy and sell a share, so you have to pay the tax, especially securities transaction tax. So now these taxes, they are levied by the union, they are collected by the union, appropriated by both center and the states. Okay, it is distributed between both center and the states. Important. Next, corporation tax. So levied by the center, collected by the center, appropriated by both center and the states. Both center and the states have the power to spend it. Okay, spend it as per the distribution formula of Finance Commission. Next, sales tax. So taxes imposed and collected by the state government. Taxes are imposed by state government and also collected and appropriated by state government. Again, an important point to note. Finally, whenever we are expressing any economic related parameters of India, so generally we express as a percentage of GDP. So here also these values are very important. So here tax to GDP ratio. So generally when we are expressing the tax collection in India, we will not express it in absolute terms, but rather we express it in terms of percentage of GDP. So here in India, tax to GDP ratio is 11.7%. 11.7%. So these are the values pertaining to 2021-22, but for the next year, whether it is 22-23 or 23-24, there will be no significant change. Okay, no significant change. So here tax to GDP ratio is 11.7%. It means if the total income of India, total GDP of India is 1 lakh rupees, then approximately around 11,000 rupees we will collect in the form of taxes. Okay, so 11.7% is a tax to GDP ratio in India. Next, within tax to GDP ratio, direct tax to GDP ratio is 6.1% and indirect tax to GDP ratio is 5.6%. Is 5.6%. Now coming to direct tax to total tax. So if the total tax collected is 1 lakh rupees, so the share of which tax is more? Direct tax is more or indirect tax is more? Again, an important point to note. So direct tax share is 51%. That is, if I receive 1 lakh rupees as an tax, so in that 1 lakh, 51,000 rupees will be direct tax and 49,000, that is 49% will be indirect taxes. So from this we understand that the share of direct taxes in the total tax revenue is more compared to the indirect tax revenue. So these kind of relative things are also equally important from exam point of view. So this was a brief about the various types of taxes. Here we discussed about what direct taxes and indirect taxes, merits and demerits of both the taxation system, and finally we discussed about the levying of taxes, collection of taxes, and appropriation of taxes. So these tax related topic is a very important topic from exam point of view.